Hello and welcome back to the course. In this video, I'm going to take a look at fear, which is one of the main drivers of psychology when it comes to trading. In front of you, I have a chart that's, the dollar Mexican peso weekly. It doesn't really matter what it is when we're speaking of the psychology of it. One of the most basic premises that the human mind will do is to try to move away from fear and head towards pleasure. Fear in the financial markets can cause sudden and violent movement, as we know. Sudden sell-off. Something's happened to make a stock or whatever break down. That's obvious, especially when you see this happen in large scale, like this here. But what's less known is that fear can get you out of the market when you should be looking at either adding to a position or simply letting the market take its natural course of action. Here's something, how many times in the past have you been in a position only to get out when it moves against you slightly and then watch it go in your original direction? This is common and is based upon fear. When you see a nice uptrend, for example, if you look a little bit closer, one thing that you should see is that we do get these pullbacks occasionally. But the question then is, should you be getting out or should you be adding? Now, looking back through a historical chart like that, it's very easy to say, oh, I just could have kept adding and I would be a multi-billionaire by now. Getting out of the market when the trend is in your favor is a decision based upon fear and not substantive technical analysis. So, for example, if you have a place where you know that if the market breaks down below, something has changed. Maybe this cluster here, you've gotten long on this impulsive move. Well, until you break down below there, for example, and it's easy to see it now, you're not out of the uptrend. You just had a sizable pullback. So how do we beat this type of fear? And it's actually quite simple. There's one main cause of this fear. It's fear of loss. So you cut back on your fear of loss by cutting back on your losses. And this is the crux of the situation here. You need to cut back on your leverage if you find yourself jumping out of the market far too quickly. Now, this happens in both directions. I mean, don't get me wrong, it's just not uptrends. You can look at a marketplace that perhaps has been very negative for quite some time. And I will zoom way out here and you can see on the monthly chart, for example, we have had several bounces, but those bounces have been selling opportunities. Now, lately it looks like we're going a little bit flat, but even then we continue to fall. So longer term traders are probably adding to their shorts, or at the very least not jumping out of it while these little pullbacks happen. And that's something to keep your eye on. I mean, there is a lot of money to be made following the trend. And if you're over levered when you get these sudden snapbacks, and you'll get them occasionally, you find yourself freaking out and getting out of the position. Again, I cannot tell or emphasize enough just how much leverage comes into play. The less leverage, the less fearful you get. For example, on this pullback here, even if you stayed with it, what's going to be easier to deal with? A 5% loss or a 50% loss of your gains? And that comes down to how leveraged you are. So keep that in mind. Keep your psychology in the forefront of your mind. If you're nervous, then dial back on the leverage. Slow and steady wins the race. You get over levered and you start losing money drastically. Even when you're trying to save it by getting out of the marketplace, you'll lose your trading capital. And at the end of the day, you need that trading capital to make any type of money. So slow and steady wins the race. Dial back a little bit on the leverage if you find yourself very uncomfortable.